Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, the 20th of April, 2026, and as I record this, the starting gun that officially opens the Boston Marathon is about to go off. However, when it comes to markets, they're more focused on the starting gun to reopen the Strait of Hormuz, and it looks like we saw a false start on that front this weekend. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. So heading into the weekend, there was optimism because Iran said that the Strait of Hormuz was open. However, the U.S. kept its blockade up until a ceasefire deal was signed. That, of course, rubbed Iran the wrong way. And now Iran has reclosed the Strait of Hormuz, firing on two vessels. Meanwhile, the U.S. has seized an Iranian cargo vessel approaching the Strait of Hormuz. So tensions remain high. And against that backdrop, it's not surprising to see that oil prices are spiking about 5% ahead of the U.S. Open. What is a bit more surprising, though, is the relative resilience of U.S. stock markets. They're pulling back about 0.5% ahead of the open as traders still look forward to progress in peace talks starting tomorrow. So for now, I think traders are keeping this situation in perspective, and it does appear that both sides do want to make a peace deal. But if that falls apart or there are any more setbacks, I think we could start to see a more substantial pullback in risk assets. More on that momentarily. As far as traditional economic data, it's likely to be a pretty quiet week. You can see all of them there. I won't recite them to you, but I will just call out two major companies reporting earnings this week. Tesla reports earnings after the bell on Wednesday, followed by Intel, a major chip maker that's had an absolute renaissance so far this year. That reports on Thursday. Those earnings reports may be more significant for markets than some of the broad macroeconomic data, especially as it's failing to capture the latest developments in the conflict in the Middle East. Today's chart of the day is the Nasdaq 100, which you can see has been on an absolute tear, going from below 23,000 now to well above 26,000 on 13 straight up days. That, of course, has left the RSI here in the lower panel in overbought territory. But again, there's relative resilience here. We are potentially looking at the first down day in almost 3 weeks. However, it's a very small move, and that shows that traders remain eager to buy any dips unless we see substantial escalation in the Middle East. Areas to watch include previous resistance, which should now provide support around 26,000. And I think unless we start to get a rapid re-escalation, that could provide a floor on any sort of pullback here in the Nasdaq 100. Also, we'll want to keep an eye on some of those earnings reports heading into most of the Magnificent Seven later on this month. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask one quick favor before you go, just drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.